Ladies and gentlemen, boys and girls, children of all ages, it's your main man Tez, that's Travis, and we're your favorite LOs. And on today's episode, we're going to talk about FHA loans, all right? What they are, how they can help the general population, and how you can best utilize an FHA loan for your home purchase. So go ahead, grab a pen and a piece of paper and your favorite beverage. We'll be back in a few to talk about FHA loans. See you in a second. All right, folks, welcome back. And as promised, today we're talking about FHA loans and how you can take advantage of them. So I'm going to go ahead and kickstart this off by punting it over to Travis. So, Travis, tell the folks a little bit about FHA loans and, let's first just break down what is FHA stand for. Let the folks know what FHA stands for.
It's my favorite question. So popular belief is that the word first time home buyer is somewhere in that mix. However, it is quite simply a home loan that is backed by the Federal Housing Administration, FHA. Did I do it right?
Yeah, you got that one right. So yes, folks, it's not first time home buyer association, Federal Housing Administration. That's who backs this loan, ladies and gentlemen. So, but no, that's that's always a good one to start with. But no, let's go ahead and get into like the general principle of the FHA loan. Like, kind of tell the folks like, I don't know, let them know like as far as the benefits of like credit and things of that nature for first time home buyers. So then that way they can kind of see how they can get into the door of purchasing a home with the FHA loan.
Yeah, I mean, that brings us right into how we kind of get that misnomer of first time home buyer loan, right? I get a lot of people that reach out and say, I'm looking for one of those FHA loans for the first time home buyer. Um, the reason why that has kind of gone together so much is that FHA loans are quite simply one of the most forgiving products on the market. Okay. Without getting into the non qualified mortgage sphere, um, they're pretty flexible, right? We can write loans as low as a 500 credit score, and we'll get real in depth on that as we go. But what you're going to see is most of the time, if you want a straightforward standard loan, you're going to want to be between at least 580, and then if you're up over 620, it's even better. But keep in mind, FHA has built-in flexibilities for more recent bankruptcies, more recent foreclosures. That's also going to be important because many times, like those windows of time that have to pass for someone to get a standard conventional loan, there's going to be a lot more drawn out than they will be for an FHA loan. I get people a lot of times they're like, Travis, I had a foreclosure 5 years ago. And, I've just kind of resigned myself to renting for the next 2, 3, maybe even 4 years because there's so much misconception out there. Bottom line is that there might be an FHA loan that's built for you, right? Obviously, as with any other mortgage loan, the higher the risk, the more that they expect you to offset that risk in ways. So that's why a lot of times when you see people talking about, FHA loans with like 500 credit scores, keep in mind that those are going to require at least 10% down, right? Whereas once you get up over 580, we're getting into a little more of a palatable zone. Most of my FHA buyers over 620 are opting to do 3.5% down. Right? There's definitely going to be an FHA loan that has some flexibility for almost every single one of the buyers. And interestingly enough, one of the most recent restructures of the FHA loan system has made that loan a lot more attractive to even some of my higher credit buyers. The way that they've reduced the interest or reduced the mortgage insurance rate, right? Um, you know, Typically speaking, an FHA interest rate is going to be slightly less than a conventional interest rate if we have the exact same qualifications, right? Usually, where it comes down to whether it makes the difference for me as an individual client, it comes down to my total monthly payment, which is also going to include my mortgage insurance in a conventional and an FHA product, right? Tez, what would you say, at least as far as like in this newly revamped FHA world that we're living in? I know that we talked about off air that we're now pricing up FHA loans for a majority of our clients to be considered. Maybe it's not the best option, but like, what have you seen and what can you tell us about the product, how they've revamped the mortgage insurance, and where it really looks like today on your side of things?
So I think the biggest advantage per se, especially for my higher credit score clients, is the fact that, as Travis alluded to, we are seeing better interest rates, but then also better MI rates, right? So with all FHA loans, there are some few that don't have the MIP come off, but for the most part, all FHA loans are going to have mortgage insurance premium, right? So when you're having a client that is in the higher echelons of credit score, and you price out that versus a conventional loan with the changes that they have made to FHA, it has a more favorable mortgage payment because the MI is lower than a conventional mortgage, right? And what that does is that allows the client to take advantage of the lower down payment of the FHA loan versus a conventional loan, but then also it makes it easier down the line to whereas they can refinance it into a conventional loan to get out of that MIP with the way that clients' houses are appreciating at such a rapid rate, right? We talked in a few videos about, on conventional loans, you can request MI off, right? But, if you're going through a refinance process, then at that point, a new conventional loan behind the FHA loan is probably the best way because best way to go. But we're not going to talk about conventional, but we want to talk about FHA. It's proven to be a better product for our higher end credit score clients, to whereas they can take advantage of the lower interest rates, take advantage of the lower mortgage insurance, as well as take advantage of the lower down payment in that regard. So that's kind of what I'm seeing lately with their new change to the MI. It was like a game changer when it came out, how they lowered that MI in that regard. So that's what I'm kind of seeing, Travis. I mean, I don't know. Is that similar for the folks, for you up in Michigan?
Yeah, I mean, you hit on it. Like it was almost like I can remember before this change took place. If someone had a 720 credit score, you were almost always going to go with a conventional product, right? Now, obviously, those who are first-time home buyers who meet certain income qualifications, who might qualify for a 3% down conventional with excellent qualifications, you can also get that discounted mortgage insurance, and sometimes you're still going to have a better bottom line with a conventional loan. But really, what it did was it took that group from 680 to 780, and it made it to where on a day to day basis, you really need to make sure that you're pricing out both options for your clients. Whereas it was pretty much like 680 to 720 was a crapshoot. Maybe you're pricing both. Anyone under 680, you're kind of keyholing into FHA because of the mortgage insurance is so high on a conventional with a sub 680. But those flexibilities, I mean, it's really cool that we've been able to open up the market and open up the options for people. And I'm sorry if I'm going to steal your thunder, but the ratio, so like the debt to income ratio forgiveness that we get on an FHA loan versus a conventional. Why don't you tell the people a little bit about how that might vary from a conventional product to an FHA product where there's more flexibility for your FHA borrowers?
So with FHA borrowers, right? Excuse me. When you get over the can't remember what tier it is, right? But once you hit it, the debt to income ratio can now go up to 57%, right? As far as giving you more bang for your buck per se, as far as like stretching your dollar. Whereas with a conventional mortgage, right, you are pretty much capped at your debt to income ratio being at the back end, mind you, folks, at 50%, right? So all your bills plus your mortgage payment, is your back end. So you got to think about it. If you're getting 7% more on the money that you have as far as your income to go towards a mortgage, it's a no-brainer in that regard. So like it at that point, it's just, I don't want to call it like a win-win, but it is a win-win, like in the sense that we are allowing more of our clients with higher ratios to have that chance of getting into a property with an FHA loan. So I, and then, because this is actually reminding me here, and I don't know if I'm going to steal some of your thunder, but it's just the train of thought that I'm on right now. When it comes to FHA loans, folks, there are only 4 primary residences, right? So we've got a video where coming up where we're talking about second homes and investment properties. But for an FHA loan, it can only be used on your primary residence, right? And that's typically for a purchase. There are a few other different types of, products through the FHA. You have a FHA Streamline. Those are for your refinances. You have a 203K loan through the FHA. That's more of a kind of like a repair kind of loan that the FHA offers clients that need some additional funds for repair. And then the last thing I kind of just want to add is the cool part. We completely like kind of walked over this. Is that on FHA loans? If I'm not mistaken, Travis, can't the cost be rolled into the loan? As far as the why am I having a Freudian slip? The closing costs can often be rolled into the loan. So that's a
In a
huge,
way,
yeah, in a way, yeah.
right? Yep, yep. You got to be, like obviously there's the opportunity for a slightly higher interest rate, getting those lender credits.
Mm-hmm.
Now, keep in mind that the powers that be would probably really frown upon a thing like rolling in closing costs, because there was a time
Yeah.
in the Wild West days of mortgages where I could go buy a $200,000 house and take out a $220,000 loan and literally not bring anything to the table, right? So let me go ahead and just be the compliance guy. Minimum contribution is a thing with an FHA loan.
Yes.
Okay. So if we're going into a home, let's just say we're making a $200,000 purchase and our intent is to put down 3.5%, my minimum contribution will always be at least that down payment, in that case, $7,000. Okay. But what oftentimes our FHA borrowers are doing, because of the savings in the interest rate, they're saying like, Travis, like I see that I can have a 6.5 roughly interest rate. I really would like to keep more of this money in my pocket so that we can buy furniture, have a rainy day fund. And I really only want to come out of that $7,000. Your lenders can offer you a rate premium, which might come with a 7% interest rate in that situation, roughly, right? But could offer you a lender credit to cover costs, right? And then speaking of rolling things in, keep in mind that the FHA 203K allows you to get a loan based upon the improved value of your home, right? Where that's a little bit more of a traditional, what people would consider to be rolling in, okay? Really cool opportunities with the FHA loan as a whole, right? And Tez, when we talked about the limitation on the debt to income on a conventional product versus an FHA, I'll be honest with you, I get truly uneasy when people have a debt to income over 50%, right? Now, the one thing that I'll always say is that not all the money that's coming into a household is reflected in a mortgage, right? So quite oftentimes we have, family members who are living with us who are going to be contributing, significant others, husbands, wives, fiancés, everything, where maybe that person doesn't have the clean enough credit profile to appear on the loan, but let's just say they make good money, right? I think that FHA, I recently did a file where, the husband was self-employed, and on paper, it didn't look real good, but obviously the cash flow was pretty positive. We were able to take them up higher than they would have been able to go with the conventional loan as far as their price range, and they're still extremely comfortable because we're only using one person's income to qualify. So that's a huge flexibility. So one of the things that I always want to make sure that we're doing is putting our people, like our viewers, whether you're in a state where where we can help you, or whether you're in a state where you'll have to work with another broker. We want to make sure that we're educating you, and making sure that we're thinking about all of the things that we can do to help you. So when we say you're able to increase your price range, the first thing that some people will think is that that's a negative thing, right? Is that someone's overreaching, but that's absolutely not what we're doing here in that situation, right? I definitely think that FHA is a product that has been revamped in the last few months, and it's super exciting to be able to tell people about this. A lot of those, you know, uh, wives' tales about FHA loans, they're just not true. And Tez, it is okay if I go into a couple of those of what an FHA loan really isn't. Can we talk about that?
I mean, sure, brother. Shoot, go ahead. What
Hey,
isn't an FHA loan? That's actually probably something it will be good for our viewers to know what isn't an FHA. Go ahead, take it away.
so what isn't an FHA loan is a product that will automatically appraise for less than if you bought a conventional. Okay. When it comes to FHA, VA, which we discussed in another video, which I'm sure we're going to link somewhere in this area down here, because Tez is the man when it comes to stuff like that.
Probably up here.
Up here.
Yeah.
Okay. All right. It doesn't mean that we're going to devalue the home, right? There are certain minimum requirements that a property must meet to accept an FHA loan. Okay. And the first of which we'll talk about is if your home is a condo, right? It must appear on an FHA approved financing list.
Mhm.
It has to be current. So if it's expired, it doesn't help us, right? It does mean that we probably do have the ability to get them approved relatively easy. But condos must be approved. And oftentimes people ask me, Travis, what makes a condo approved? I'll be honest with you. A lot of times it just comes down to the powers that be when it comes to the homeowners associations. If they're willing to open their books to prove to the Federal Housing Administration that they have the proper funding to take care of you should something happen. Do they have reserve assets in their account, right? So yes, if an FHA loan, it isn't going to be super friendly if your FHA condo is not an FHA condo, right? When it comes to the appraisal process, a comp is a comp. Does not change whether it's FHA or conventional. If my next door neighbor's home is exactly like mine and it just sold for $300,000, my house is not worth 290 on an FHA loan and 305 on a conventional loan. That's not how it works. However, they're going to make sure that that property meets the minimum property standards, right? Those minimum property standards, one of the biggest things we're going to see. Oftentimes it is, I would say it's probably my realtor friends, and I don't mean to take a shot at you guys. It's probably the most misunderstood thing when it comes to what we do here with FHA loans. We're going to tear this loan apart. If there's asbestos in the house, if there's missing handrails off of stairwells or staircases inside the house, outside the house, chipped paint that may or may not be lead-based paint, those are going to be issues.
And
Okay.
and let me just chime in, and this might be taking a shot. But why wouldn't you want that for your client though? Like, you know what I'm saying? So I always ask that, like, hey, if an FHA appraisal, because it has to be an appraisal done by an FHA approved appraiser, ladies and gentlemen. So y'all know that, right? But if they're pointing out things that's a benefit to the client, I mean, granted that this loan is backed by the FHA, so they're going to be owning it and making sure if you default, the lender's covered, right? But if they're saying like, hey, this is a standard, like the bare minimum standards, right, of living, why would that be a bad thing to real estate agents? Just blows my mind. It's just like, hey, would you put your mom in that house if your mom was buying that house and she had to get an FHA loan? Like, would you want her to have a missing handrail or chipped paint or any asbestos or like, you know what I'm saying? Like those kinds of questions I used to ask. Like, hey, like why? Like, if anything, that's a protection for the client that they're buying a house that you're putting them in a good house, right, off rip, right? So that's why, like, I just wanted to chime in on it because that was kind of like on my brain. Like, hey, Why is that a bad thing? I mean, I just don't get it. But no, I didn't mean to interrupt you, brother. Go ahead. You're on a roll. Go.
No, no, hey, great piece of info, and sometimes we just have to keep it real over here. I mean, try not to falsely accuse anybody of anything, but sometimes we definitely have to keep it real, right? Three S's for the property condition, guys, and the three S's are very easy to remember: safety, security, soundness. Right? Those are the three things that an FHA appraiser is going to look at. Now, my major caveat of all this, an FHA appraiser is not a home inspector. Okay. If you have a home inspection done before an FHA appraisal, most oftentimes they should kind of hit on very similar things. Okay. However, I've had people that have thought to themselves, like, oh, I heard an FHA appraisal super thorough. I'm not going to have an inspection. Please don't do that. Please don't do that. Okay. FHA products, fantastic products. We've breezed over down payment. As low as 3.5%. Some people get more luck at 5%, right? Um, gift funds. We can use gift funds. They do have to be documented. A little bit tighter than a conventional loan. There has to be a relationship there that has to make sense. Quite oftentimes, most people that are gifting people money to buy a house, if it's truly a gift, you're not getting these gifts from someone who isn't already an FHA gift source, right? I don't know many people that are just like, I got my next door neighbor around the corner really thinks I'm a cool guy. He's going to bless me with 10 G's to buy this house. Okay.
I mean, don't we all have that neighbor?
If you have that neighbor, I will relocate tomorrow. I don't have that neighbor. I know the South is friendly, Tess.
Pretty nice. It's pretty nice. But yeah, no, yes. So that's good. The only thing I'd add in on those requirements, ladies and gentlemen, you do have to occupy the property within 60 days of closing. So, once you get an FHA, but I really don't know too many people who are going to take 60 days to go get into the house. I mean, granted, it might be, like a rental thing, kind of, process of moving, et cetera, cross country kind of move, maybe that might be something like that. But typically, ladies and gentlemen, I just make sure you're in that house within 60 days of actually closing. Let me just jump in real quick, Trav. One thing that I wanted to tell the folks is in regards to the loan limit, right? So with the loan limit with FHA loans, it's a little bit different than conventional, right? So if you go back to our conventional video, I'll probably link it somewhere up here too. With our conventional loan limits, those loan limits are far higher than our FHA loan limits, right? So FHA loan limits are based on your county, right? And they do adjust for high cost areas, but even those are still lower than a conventional mortgage. So you have to do your due diligence as far as like what purchase price you're looking into. As of now, I can only speak for my county because I'm down here in Cabarrus County. The loan limit is $472,030, right? The high cost limit can go all the way up to, I believe it's $1 million and some change. But for the most part, you're sticking around if you're in a high cost area in different like states, maybe 600,000 on a single family residence. But a safe number is that 472K, right? So what you want to do is whenever you're looking at home pricing and your qualification, just ask your loan advisor like, hey, I'm looking in these counties on FHA. What's the loan limit? So then that also might affect like your purchase, your buying power, where you buy a home, things of that nature, right? So the loan limit is something that you definitely want to know for your county. And like I said, ask your loan advisor to walk you through that as far as where you're looking to buy a home. So that way, you know what you're getting into as far as what you can and can't buy when you're going shopping with an FHA loan. So that's kind of like, what I wanted to kind of chime in on with that one, Travis. Is there anything that we missed when it comes to FHA?
I'm sure there is. There's always something we miss, right? We're never perfect.
Yeah.
I mean, we're pretty close, if I'm being honest. We're pretty close. I would say there's probably some people that don't agree with us, but hi to them as well. Loan limits, I don't see as much fluctuation in them as I almost feel like I should, right? So oftentimes, that 472 number, I believe you said, it's pretty much the standard, right? Like I've
Mm-hmm.
looked at some counties, across just doing our research. Like you punch in some of those like high cost like states and stuff like that, places that you would think there would be more expensive houses, and oftentimes you don't see that fluctuation in the limit. And keep in mind that's a loan limit as well. I have had people that have taken the necessary down payment to get their loan under the
That
loan
part.
limit. Like I've had a client in just in the recent past that actually brought like 8.5% down just to be able to take advantage of an FHA loan, right? So if I'm looking at a house that's it doesn't mean that you've got to cross off all the houses that are over 472, because really all we're going to have a limit on how much you can
Exactly.
borrow.
Good
I
good
think
clarity. Yeah, good clarity.
Yeah, I think that we could probably talk about this for hours and hours and hours, right? And if there's anything that we didn't cover here, Tez is going to drop all the knowledge here as far as what states we're licensed in, what states our company is licensed in. Keep in mind that we're here to help out anybody that we can, right? If there's ever any question, or if you feel like you just have had your mind blown today, I ask of you to please do the thing down here that Tez is going to tell you to do in just a couple of seconds.
Oh man, he likes to do that, ladies and gentlemen. But yes, if you found this information helpful, ladies and gentlemen, please hit that like button, hit the subscribe button, as well as the bell notification. And if there's any questions or anything we may have missed, go ahead and bang out those comments. Right, we're open source of knowledge here, so go ahead, ask away, especially about any kind of loan products that we have or loan types. But with that being said, I'm Tez. That's Travis. And we're your favorite LOs. Until next time, ladies and gentlemen, see ya.